Lucid is getting ready to announce their Q4 financials, and I'm here to tell you there's some problems in Arizona. And it's not just that they're not producing many cars and selling even fewer than they make. No, the problem is in the warranties and the cash reserves. I'm Brian. Welcome to Future Asa. Did want to say a big quick thanks to newest YouTube channel members Martin, Lonnie, Uzziah, and Dwight. Thank you guys for your support. Your decision to support the channel is what keeps me going, and I can't do it without you. So last year, I made a video talking about Lucid. I had some inside information from some folks. Look at that fella there. So young, so handsome. Where did I go wrong? Anyway, our video was all about how some firsthand accounts that I had gotten from Lucid employees. Now, Lucid faithful were eager to jump in the comments and say, you're a fanboy. You can't possibly say anything nice about anyone other than Tesla. Well, I've made videos saying all the ways Tesla falls short. I've made videos saying other companies are doing good. So that theory doesn't hold much water. But hey, man, I get it. You're bitter and angry. Now, a lot of the problems that I explained in this video have since proven out. I'll link it in the description because there's a lot of good points in there and things. If I was going to make stuff up, I'd come up with sexier lies than that. Come on, you guys know me by now. So if you were to type in Lucid Motors warranty problems, what would you find? A bunch of people complaining. It's a new car. It's a car. All cars have warranty problems. Don't let that get in your head. It happens. I wouldn't worry about it. That's not what worried me. Warranty Week is the definitive source on all things warranty. Now, this is numbers as of last year, where they saw that Lucid's accrual rate was too high. The company made electric sports cars. Let's see. Lucid produced 7,000 EVs in 2022, and this figure shows their warranty rates and accruals. And what we see is their claims rate exploded, and their accrual rate at 4.5% has jumped up to 7.5%. Are those numbers high? Is that bad? Well, let's look at Tesla's numbers. They're right here. Much, much, much lower across the board. Now, there are people who say, oh, Tesla calls every warranty repair a goodwill repair instead of warranty. No, they don't. There are things they do that are not. I've seen people who lost a battery just outside of warranty get it replaced. I've seen that happen. That's a thing. Don't count on it. That seems very gracious, but they felt, hey, it was so close to it, good enough. So these numbers are not good. The claims rate was around 1.9, but all of a sudden it's 5.5. Well, yes, because the cars are out on the market. The longer it's out there, the more likely it is to experience a failure. And hopefully these repairs happen under warranty, but they don't always. That's not always how it works. You hope for the best. A lot of times a new car will have some issues and they'll get worked out and then the car is fine for a good long time. That's what we're hoping is happening. But these cars were brand new. I mean, they had sold so few. There were so few on the market. So that meant, yeah, the accrual rate jumped. The claims rate jumped. It is not good. So I wanted to find out what Lucid's numbers look like now. So I went to look at their filings. Well, there's no filing yet this year. The last annual statement was a year ago. The new one's coming up. So I went ahead and dug in here. And if you just search for warranty, you'll find 79 occurrences of it. Under risks, insufficient reserves to cover future warranty repairs. Don't stress about that. That's normal language. Increased service and warranty costs. No, we're just talking about potential risks, warranty characteristics, all that. No, those are all fine. No, where we need to look is at the numbers themselves. If I can find my mouse, I can get to it. They are, all of these things are normal, but they do have uncommon exposure to warranty. Warranty accrual. At the beginning of the period, they had $1.2 million put aside. They spent $11 million on warranty repairs during 22. It's kind of high. And allocated an additional $33 billion, ending the year at $23 million. $33 million they put aside, $23 million they still had on hand at the end of 2022. How's this compare? Well, let's see. They sold 7,180 cars in 2022, and they sold 300 before that. So that does not give you very many cars. Divided by 33 million, that's $4,400 they had set aside per car for every single car. $4,400, 44.71 and 71 pennies, if you like. That's a lot of money to have set aside and to put aside. Now they spent 11 million of it, but so that would be even worse if we change that to 22 million. That's a lot. That's a lot to have put aside. It's not good. So that tells me the cars are they start at 80,000, famously. You can get quite a good car for 80,000. Why wouldn't you? But they're putting $5,000 aside. That means there's a 1 in 16 chance the entire car needs to be replaced. That seems too high. And again, if you look at the warranty week numbers, it is too high. It is very high. So that puts us in a strange place. Now, I looked at other years of filings, and what I found was I looked at other years to see how they compared. In 2021, they didn't report it. All you'd find is the standard language with no actual numbers broken out. What they did is they lumped it all into cost of revenue. So that doesn't really tell you anything. You don't know where the money's going. It was just the cost. It was just the cost. There it is. Cost of revenue, which includes wages, stock, estimated warranty costs, and charges to inventory, to reduce inventory. So that's a big question mark. We don't actually know what it was. And in the previous year, same thing. Lucid's problem is they're selling uncorked cars. You know how on your Model Y, you can pay a little extra and get acceleration boost. It costs $2,000. Now, why would I pay $2,000? The car already has it in there. Because you just increase the likelihood of a warranty claim. You don't want that. You need to cover that potential for damage. Now, they could uncork it even further, give you more and more and more performance. You could have the best horsepower possible on the market if what you're optimizing for is horsepower over longevity. And we are seeing some longevity issues arising with Lucid. How do they get so much range out of their battery? By taxing it. How do they get so much power out of that tiny little motor? By taxing it. By abusing it in ways that make it very difficult for it to survive. Now, let's talk about cash on hand. 4.4 billion, pretty good. That means they've got a runway through 2025. It doesn't. What happens is, if you get below a certain point, you run out of headroom. You can no longer operate. You will find it difficult to get credit. Your suppliers will ask for payment up front. It cascades. And the shareholders will recognize that one of two things is about to happen: a new stock raise, a new raise of funds via stock sale, or additional debt, or that the company's just going to go broke. That tanks the stock. Borrowing money when your cash reserves get below $2.5 billion for a company of this type becomes very difficult. You do not want to get below $2.5 billion. Boy, they had to $1 million before the Saudis jumped in and saved them. But if you look at their burn rate, as soon as they get cash, they spend it. They get cash, they spend it. They haven't gotten their spending problem under control. Really, we may see in a few days when we get the new numbers that this has accelerated because they've started operations in Saudi Arabia to put their knockdown factory there, where they ship in nearly complete cars and just finish them. That's a big expense without a lot of return. They're going to have a problem. They're going to have to raise more money. So the saving grace, the midsize, you guys, they're going to make a smaller SUV. They've got Corey from Monroe and Associates, who I've met many times. I've interviewed him. Corey is a great guy, and he's very sharp. We don't know if they're actually letting him do his job, if they're actually letting him fix things. Gravity still hasn't come out yet. It could come out any day. It appears to be about done. But that midsize is going to cost a fortune to bring to market, and they don't got the money. So what are they going to do? Raise another $10 billion? They could. The Saudi investment fund may just foot the bill for that additional $10 billion to get the midsize mass market vehicle up and running. But what happens when you have a market cap of $7 billion and you add $10 billion worth of shares? You lose over half your value. It's gone. It's gone. There are more shares. It is diluted. It is diluted. You say, well, yes, but the company's now worth 10 billion more. Is it? Because all you bought's a factory. You haven't actually made anything yet. And as this price falls, this 332 if it continues to fall, you're going to have a problem. So if we look at our 1-year chart, let's find June 12th. That was the date that my video came out. The stock has lost half its value. Now, a lot of companies have fared poorly during this time. Many, but it was the fundamentals. There are companies whose fundamentals are unchanged where the stock is down. That happens too, especially hype stocks. I can't believe Palantir has come back as far as it has. I'm tempted to sell and cut my losses. Only bought a few shares, but still. And if you look at 5 years, from the absolute peak, oh, that was so exciting in 21, we are down a paltry 93.99%. That's tough. I know a lot of people, smart people, good people, who hold shares, who kept buying all the way down, who have 1,000, 10,000 or more shares, who are hoping, gosh, if we just go back to this, well, yeah, if you 20x, yeah, your 30 grand's going to be worth a few dollars. But it's going to be a long, brutal road is what it's going to be. And we are talking, if the Saudis have to bring in another 5-10 billion just for a chance for them to make it, we are talking homeopathy levels of dilution at the shareholder level. Something I don't think we want to see. So, big news, January 11th. That's when it was announced. It's going to be February 21st. So on Wednesday, February 21st, the report will come out. What we need to see, what we need to see is the cash burn to be addressed, to be solved a little bit. Cut the cash burn. I'm hopeful. I'm not hopeful. I'm deeply concerned. What we need to see is something that indicates that revenue is actually coming in. And what we need to see is warranty repairs not increasing from the levels we saw a year ago. I've heard all kinds of horror stories from people at Lucid about it. And there was one guy who reached out to me. I bet you're here. You know who you are. Young man who said, I know a guy at Lucid. Just send me your questions and I'll ask him. No. When I deal with sources, ideally, I will meet them face to face, but at the very least, I need to see your badge and talk directly. I've met Lucid employees who wanted to feed me information that I knew was BS. I didn't listen to them because not only do I get the information and verify that they are who they say they are, I then fact check it. One gentleman had told me last summer that Sapphire was already out. It was already being delivered. And I knew that was bogus. So I take my sources seriously, I vet them, and that's why I provide a level of quality on these sorts of things that you may not find otherwise. What did I miss? What did I misunderstand? Leave it in the comments. Did I get it right? Did I get it wrong? What kind of numbers are you expecting to see at the financials on February 21st? Let me know. Everybody else, stay tuned, stay juicy, and I cannot wait to hear from you clever robots on the flippity flop.